Noble Capital Markets was well represented at the Precious Metals Summit last week at the Beaver Creek Resort in Colorado. The conference attracted 1,700 registrants compared to approximately 1,200 in 2024. That's about a 40% increase, and included a broad spectrum of mining companies and institutional investors. Collectively, between Michael and myself, Noble had private meetings with over 70 company management teams during the invitation-only event. So year-to-date through September 12th, all of the mining indices have outperformed the S&P 500. For example, the XME, which is the broader S&P Metals and Mining ETF, that was up about 51% compared to 11.9% for the S&P 500 index. The two gold indices were up 105.7% and 110.6% respectively. I think if you look at our note, the precious metals have done very well and outperformed base metals, although copper has appreciated about 15.5%. So producers were the first to experience the benefit of strengthening commodity prices, which have carried through to income and cash flow statements. And so we do expect more consolidation within the junior exploration sector and increased merger and acquisition activity. And, a common refrain we heard from Canada and Australia-based company management teams during our meetings is a desire to increase exposure and access to the U.S. capital markets, which are, of course, the largest, deepest, and most liquid in the world. Generalist investors are returning to the sector, and, we think greater allocations to the metals and mining sector among U.S. investors could provide another boost to valuation levels. So we remain constructive on the metals and mining sector. The broad-based rally in precious metals, I think, remains durable. And while base metals have underperformed precious metals, we do favor exposure to mining companies with copper exposure due to secular demand themes, including electrification, which we think supports a constructive outlook.